Good afternoon. We are sitting here on Sunday, the 18th of July, getting ready for a new market week. And the charts are telling us it's going to be a pivotal one, and we will get into that. This is the Plus3 stock and commodity forecast preview show. My name is Ben Maldonado. I'm here as always with Barry Hederachi. Hey, Barry, how are you?
Doing pretty good.
That's good. I don't know what you've seen in your weekend review, but I sure have seen a lot of things at a decision point.
All right, let's get to it.
Let's get to it. We start off, as always, with the poster child for this throw caution to the wind market, Bitcoin. Bitcoin continues to struggle with this triangle in terms of making progress on the upside and, truthfully, much on the downside. The only major event that we've seen in the past week is that we are now getting bars that are fully under this half square in that 32,900 area. Things are not looking great for Bitcoin. It looks like it wants to resolve to the downside. We are not involved, but it's looking weak. Where are you on Bitcoin, Barry?
Watching from a distance.
That's healthy.
Well, this looks a little bit, the pattern looks a little weak. So we broke through the half square. It looks like we're going to go a little lower. Then you guys see you got a new trend line. So let's just follow it and see.
Right. And the question is, do we get down to this bottom square and in this 23,000 range? That's the question.
Well, probabilities are yes.
Yeah, that's where we're heading.
Being that we can't really hold above that half square.
Right. Before I throw it back to you, I wanted to show some markets that are moving before we get into the commodities, and that's the NQs. This has been the star of the COVID rally. It is, on the daily, we punched a little bit through the trend line on Friday with the weakness we saw. More importantly, I was looking at the monthly, and we reversed on a half square and on a half square in timing. So we have price and time here. My contention is this is where most of the excess has been. So this is where we're going to have to see some purging, if you will. I just take this reversal here on the half square on a monthly basis as a warning shot. I mean, we could pull back to 14 and hold, and that would continue to be bullish on the daily. That's right in this area here. That's about what is that? That's 14.5. Back here is 14. 13.9. So we could pull back to here and have it, sit on top and be bullish. It's just a bit of a warning signal in the stuff that I look at. What are your thoughts on the NQs?
Well, I think there's room to take a little breather and correct a little bit.
Mm-hmm.
Yeah, and look at that steep climb, right?
Yeah. Not a very sustainable angle.
Mm-hmm.
And we have price and time. So now we have to see if they're follow through and do we get confirmation from the price action. But we'll see soon enough.
What's that level at that half square at the high?
At the high, the level is 14,860.
Okay.
And then this full square here is at the around 13,000 level if we pull back sharply.
All right.
All right, let me throw it over to you, and let's do the big five review. I see the wedge.
Mm-hmm.
The question is, who's going to get a wedgie, the Bulls or the Bears?
Yeah, well, we'll have to wait and see.
Right.
But you know who's got one coming, right?
Yeah, for sure.
Well, let's just review. Well, let me just start here. We've been looking at the square coming off last year's lows, and we've been talking about the 270 degrees up level in the last few sessions, and the idea there being that we really need to hold above this 4330 or 4350 area, right where the line is. And I dropped, well, let me move the square out of the way for a minute. And we dropped a line above last week as a potential resistance area. And that was around 4380, 4381. And then we had a level above that at 4440, right? And looks like the market stalled out at that first level and it wasn't able to hold above the 4350. And that was like our balance point to see if the market is strong or if it's getting a little bit soft. So as you can see, it couldn't hold above 4350 and we sold off. And it's possible, we talked about this in the last show that how every 90 degrees, when we hit these areas, the market usually tends to rest a bit or have a little bit of a correction or pullback or a little bit of a rest. So here, I think we have to expect the same. And the first sign was the fact that we couldn't hold above 4350. Now looking at support for next week, it's if the internal strength is there, I think we ought to hold above 43. That's the short line here. And let me squares out of the way so it's not confusing. So we have 4,300 as first level. If 4,300 goes, I would say it wouldn't be out of the, it wouldn't be surprising if we don't go and test 4225 or for even 4,200 level.
Mm-hmm.
And another support level for next week would be around 4,250. So if 43 goes, it's pretty much about, we have a little bit of a gap into 4,250 and then on to 4,200 and the lines are there. And the 4225 area is kind of above the old ledge that we had built before we moved higher. So that's a logical place, but we also have numbers to support that. And on the weekly, again, we've been tracking this for a while, and mainly the steep angle that we've been crawling up, and we're still above it, but not if we get down to the 4225 area. So we're watching that. And one other thing I wanted to talk about, I'm not going to spend a lot of time on the S&P. I'm not going to spend a lot of time on every market, but the S&P is a little bit important here. So
yeah, that 4,300 is important in my work too.
Yeah. So here, coming off last year's low, we had 270 degrees at the high. And then I'm just going through the low, like from the June low, we had 180. And from the low in January, we were up 90. And the pullback in May, we're up 45. So there's plenty of resistance up here, at least in terms of looking at these moves through the square. So I'm thinking next week we should have some kind of a correction. Now, what kind of a correction? It's possible we spike down hard and get to one of these levels and then work the market will try to work itself back. If not, I'm guessing we're gonna, sort of sideways correct above one of these levels. Do you have anything to add to that, Ben?
No, I agree with you. I think last week it was 4,350. This week it's 4,300.
Mm.
When the 4,350 gave way, we hit an air pocket. If 4,300 goes, I think we're going to get another air pocket.
Right. And next up, we'll take a look at bonds. Here, since June, we've been sort of bullish, especially if we got above this 59, the purple line that we have there, and we dropped the uptrend line. And the market's been, it held the trend. And we got above the half square and doing okay. Last week we came back to test, recovered. So looking at the bonds a little bit, I have two potential targets on the upside. That would be 65, 29, and 65 below that. And they're pretty tightly, it's close together, 65, 65. It's almost a point apart. And so on next week, I'm expecting it to at least go and retest this. That's what I have for bonds. Take a quick look at the weekly. Weekly, again, this 52, this line, this is a purple line that we have on the daily. It comes from this square. And as you can see, we're well above it. And we had an inside weekly bar last week, which usually could end up being bullish. So I think we're going to go back up and test that level on the daily in short order. Next one would be crude. I'm trying to get through these quickly because the videos, we had some feedback saying, try to make the video shorter. So that's why I'm trying to do that. Go a little fast. And if there's a market that we need to talk about, spend a few extra minutes on it. So here's the crude chart. We were looking for a target up at the 144 degree level, which is around $78, 78, $79. Didn't quite get there, but I would say it's close enough. And let's see. So from the low in last March, we went up a half square. I think we were watching this squaring here on a couple of other videos. And that being the case, we turned down. And for now, it looks like we're just going to correct for a bit. And I have two levels for the for crude. That would be 66.80 on the downside and 79.08 resistance above. And I think a correction down to 66, 67, where the blue line is, would be healthy, and it would be completely normal. It'll hold the lower trend line that we have going up here, and it'll be above this, roughly above this consolidation. Looking at the weekly, you can see the strong trend we've been following. So it's, a little bit of a correction is expected. Overall, it's bullish. We're looking just for a little correction next week based on the levels and the price action. Do you have anything to add to crude there, Ben?
For me, it's the mark off is 75 and 70. 75 is resistance, pretty strong resistance right now, and 70 is support. So in between there, we could just chop around. When we break either one of those, I think that's where we're going to see the real move.
I think any chop can be bracketed between the 66, 67, and 79, which should be in there. Now, if we break 67, which I doubt, but that would be a cause for concern. Up here, I think everything's bullish and rosy and should be fine. Next one would be gold. Not much to say here, just like the other markets. But I dropped a couple of support resistance lines, and I think expect gold to be strong above 1832 right here at 8032. And I'm looking for support to be around 1789. And if it gets under 1789, it'll really change the picture of gold and what we think for the next few weeks. And if it can hold, if it can get above 1832, I think we're ready to do another leg up. But at the moment, not much going on in gold. It's just sort of
with the metals, gold, silver, and copper. I was getting a feeling when I was reviewing the charts this weekend that they're chopping around and they're going to do a clean out move before they go.
Yeah, so we don't want to be in there messing around. So, and the weekly, you can see we held support pretty well down at the lows. So there is upside room left. So it's probably going to be just kind of a correction, long as we're above the 1789. That's a key level to watch next week. And
I mean, we had a bullish week on gold, and that really helps the technical picture. It just feels like it's not done shaking people out of the trend yet.
right. So I think if you watch these two levels for next week, I think we'll be in good shape. And then the dollar, take a quick look. Been bullish the dollar last few months, ever since this low came in. And the blue line was a sort of a balance point that we added a few weeks ago. The idea being that we want to see the dollar holding above it, came back and retested here. It was fine. Now it's starting to grind higher. I added a new line here, which is 92.59, let's say 92.60. It's sort of a critical level. I think if we settle above that, I would expect it to go up, move higher to a 94, retest the 94 area level. So I think that 92.60 is a key level to watch next week for the dollar. Looks like it's got a little bit of edge here, so it looks like it's setting up for some kind of a break. See that little triangle there?
Sure.
So yeah, this 94 area will be the next test according to looking at the squares. I should pull up a dollar weekly next time. Anyway, let's take a quick look at the euro. We've been bearish the euro dollar ever since we took out the this 2054 line. Well, this 2140 first, and then the half square. So we've been watching this, and I think the last couple of weeks we've been talking about it's possible we come back down and test the low in last March, which is around 1700, and looks like that's where it's going. So this
fits with the dollar strength that you were seeing in the Dixie.
Yeah, fits with the dollar strength, and the pattern is sort of a sloppy bearish trend. So it looks like that's holding together. It's fine. And let's take a quick look at the weekly, and we'll be. Weekly, same thing. It's weak, sort of sloshing around, and the lower boundary being around 1740. I would say 1730 being the lower boundary here. And I'm not certain if that'll be support, but certainly we're expecting that to be tested before this is all done. Anything on the euro, Ben?
No, I agree with you. It's looking like lower is the path of least resistance.
Yeah. All right. I think that's all I got. Let me put it back to you. All right.
Okay.
Wow, Ben. What's that circle chart?
This is I just wanted to show this. This is a weekly on the 30-year treasury. I've been completely confused about what the hell's going on in the 30-year treasury market for the last 2-3 weeks. I was bullish, then bearish, now bullish. It's going to get resolved this week. We are right up against the circle. It's either got to break through the circle and then it can continue on, or it's got to run into this edge of this circle and come down. You can see what's happened previously when it hits these circles.
And you've had this circle for months and months. I remember
months, man. I've just letting this thing been running, and this when I was looking at bonds until I got to this chart, I was like, man, I don't know what it's going to do. It can go up, it can go down. I mean, it's equal probability, but this is going to be the thing that guides me for this week in terms of what the hell's going to happen with bonds. But I just wanted to share that because it's funny that you do everything and you try and find things, and then it's one chart that helps clear things up. Last week we talked about the grains. Middle of the week I tweeted about, hey, these things are looking good. It feels like we have a good bottom. We had this nice rally in beans. It ran into resistance at the top of the square, which is exactly what you'd expect and what probabilities favor. So what I'm thinking is we're going to see some weakness this week in beans, wheat, and corn. And what we want to do is we want to watch and see how it acts. Do we find support at the half square? Do we make a higher low compared to this low? If we do, we're setting up then for a really fast move higher. So as far as beans and wheat and corn this week, I think it's really important to pay attention to the price action and where our lows come in, because it's going to give us clues as to whether we have a really big opportunity coming up with a wave 3 type move that we want to be involved in. Real quickly, here's wheat. So if we can pull back into this level here, which is around 668, 670 area, that'll be a nice support level. But you can see the move we had the past week in them as well. Then we've got corn is the last one. And so corn is sitting on support right now. Interesting to see if it can hold here and then keep going higher, or are we going to, pull back? As long as we make a higher low, this low looks really good. There's geometry at the low. We had the square at the low. So there's a lot of good confluence here. If we can hold that low, we should have a nice move higher there. The next one I want to go over, Barry covered crude. Crude, I think, is bullish longer term. The monthly and weekly are very bullish setups. We just got to watch those levels and trade based off the levels if they hold or if we can break out. The one I wanted to show everyone that I've talked a little bit about is natural gas. We've been chopping around after this nice move higher, and this kind of looks fourth wave-ish. But if you can see, we're holding on this half square on the daily, which, essentially we're just burning off time here. We're not really pulling back much in terms of price. Does it mean they're not going to come down and try and do a false break and take out this low? No, that's usually what they do prior to a fast move. But gas is looking good and sort of triangulating here on a daily basis. I know you've been looking at gas, Barry. What do you see on the gas?
Well, I think the pattern is bullish. The structure is bullish. And can you go back to that the shorter
to the
time?
Daily? Yeah, there's your daily.
I think it's possible that we go sideways into the trend line and then take off. That's one of the patterns that natural gas seems to like to do. But there's plenty of air above the old high, so it looks good.
Yeah, here's a look at the weekly. No surprise why we're stalling here. It's right on the full square. And of course, the bullishness comes from this big monthly pattern with this multi-year base and the breakout. And again, we're stalling here at this half square. So if we mark time and go sideways, like Barry suggested, the next leg up should be a really, really nice move. Let's see. The other one I wanted to cover, there's the softs are looking really good now as well. Here's the daily on coffee. And coffee, as you can see, is acting really, really well with the squares. Good resonance with the square. All these hits on the half square. Then we come up to the full square. Stops on the half square again. This was the nice move last week after an ABC down.
False break.
ABC down with a false break, and we move up. It may, pull back again and just keep winding up in here, or if we can get above this half square, that'll be the signal that we're going up to the top of the square. And that's like around 164, 165. But on a bigger time frame, it's setting up for a big sort of wave 3 type move here. You can see on the weekly, it looks like chop, which is what we've basically been experiencing. But we're holding this full square. And then on the monthly, it's that similar commodity pattern of, big base breakout coming. So there's a lot of room to go on the bigger time frames. I'm just really, really focused on trying to maintain a position I have and then when to add for the next leg up. But the next leg up's coming. Another one that looks similar, sugar. This is the daily here. You can see what they did. They poked through the trend line here and then rallied right back, and we sat on top of the square on with Friday's bar and made a nice push higher. Again, another consolidation, up, down, going nowhere, basically burning time. And I think that's the pattern in a lot of these commodities, where they're absorbing that major first run. And now it feels like, because we're getting higher lows and sort of bullish consolidations, that they're setting up for the next run higher. On sugar, here's the weekly. No surprise while we're stalling in this area. Here's another example of a clean out move. Took out this low and then hard reversal to the upside. But sugar looks to be setting up for a very similar move to the other, like grains that are further along. This breakout, there was a consolidation on the monthly, and then another move higher. So sugar looks good. And the last one I want to talk about is cotton. Mentioned that a little last week. Told you we were in this big triangle. Well, we broke out of the triangle, sitting on top of the half square. So this looks like this, 5-6 month consolidation is done. And now we're setting up for another move higher in cotton.
And what's the target up there for cotton?
On the daily?
Yeah,
we're looking at a price up here around 94, which was, that would be, I fully expect these highs to get taken out, but if you just go by the square, it's 94. And if you look at the weekly, this is a Gartley. Look at how it respected this line, is just crawling up. It feels like it's just building up momentum and strength to go higher.
Mm-hmm.
Monthly pattern is the same thing, right? Big base off of a major high, breakout, and then you can really see the consolidation here and how we broke out of this monthly triangle this past week. So I think in many markets, gold and silver included, we're seeing these big corrections that have happened, whether they're big in time or big in price. Most of them are big in time. They're coming to a head. And I don't know if it's going to be this week or next month, but I'm on alert because they're in a position where they've made a move up, corrected, and now the next move higher is going to be starting soon. And that one could possibly be that third wave, catching it on a higher time frame, like a weekly or a monthly, is an attractive move and one you want to get on. What do you see big picture on these commodities, Barry?
I think there's plenty of room to run. I'm not sure why. We don't really look at the fundamentals that much. I can't explain it, but the charts are really looking bullish, and we've been bullish since last year or before that. And I remember 2019 we started looking at inflation and all of that and getting ready. And so far it's been okay. And so I don't think it's done yet. So just keep, make sure to keep the eyes on the prize, like they say.
Absolutely. Watch the levels we talk about. This week looks like a week of action, and I guess in golf they call Saturday moving day. I think this week is going to be moving week in the markets, where we're going to see things either start violating support or breaking out and getting through resistance. So watch the levels. We'll be posting levels on Twitter, and obviously in this video we talked about a lot of levels, but watch the levels and be ready to take action.
Sounds good.
Any other final words for this week's show?
No, I think we covered it. And starting next week, I think we'll put up a spreadsheet with all the levels that we talk about, so it's easier for people to have those instead of jotting down notes while they're watching. And it's also easy to just reference back if they need to look at any level. So we'll have that coming up next week. We'll start posting that link.
Excellent. Have a great week, everybody, and we'll talk to you next Sunday.
All right. Take care, everybody.
See ya.